Hi everyone, I am Anchal from Green Portfolio. We have been getting a lot of questions about our green ethical range of products. We have with us Karan, who heads product at Green Portfolio to discuss everything about this fund. Thank you for joining us today, Karan.
Thank you, Anchi.
So, Karan, let's start with the basics first. Tell us everything about this fund. How do you invest in this fund? What is the fund philosophy, etc.?
So, Anchal, at Green Portfolio, we believe that investments should reflect the investor's values, right? So, our green ethical range of products are specifically crafted for those who want their investments to be fully Sharia compliant. That means that all the stocks and sectors that they invest in should be compliant under the ethical guidelines. So, that's how the fund is created.
Okay. So, Karan, some investors wonder how our process stays true to ethical guidelines because not everyone in our team shares the same background. So, how do you ensure that?
That's actually a very common question. We don't just stay true to it, we ensure 100% compliance. And we do that by working very closely with our trusted Sharia advisory partners over at Islamicly.com. They are the ones we've partnered up for this product with. They not only ensure that the current holdings of the portfolio are compliant by doing their biannual audits, but also monitor and screen the model universe from which stocks are picked for this portfolio. So at all times, essentially, we have a system in place where we are able to weed out any non-compliant stocks and ensure 100% compliance.
So, suppose one of our stocks turn non-compliant after we have already invested in that. How do we go about it?
So we like to be proactive in these cases. Typically, we have a 90-day period given to us by the board where we have 90 days worth of time to exit from the stock which has turned non-compliant. But usually in our process, our rebalance timelines are much faster, especially when a stock has turned non-compliant now, right? So we're able to exit much faster than the 90-day period.
Karan, from what I understand from our conversation, this portfolio caters to specific ethical guidelines, right? And the stocks you have invested in, you must be receiving dividends on that. How do you deal with dividends considering that you have to adhere to certain ethical principles?
Sometimes a compliant company might also give out dividends. And another case that comes up is that a compliant company might earn a small portion of its earnings from a business segment that is non compliant. In both these cases, what we do is we rely on a Sharia advisory board over at Islamicly.com, and they, while completing the biannual audit for the portfolios, give us the calculation of how much amount to purify. We then share this amount with our investors who can then give it off to charity and make the portfolio compliant again.
Is the process same for the companies whose certain proportion of revenues might be coming from non-ethical activities?
Yes, so the process is the same. Essentially, a lot of the stocks where a large portion of revenues might be coming from non-permissible activities will not even make it to the compliant list of stocks.
Okay.
But for the companies that do make it to the compliant list, and that means that the revenue coming from non-permissible activities is pretty small. For those companies, we end up doing the purification process, right, through the audit.
So, Karan, the choices are very limited when it comes to ethically compliant investment products available in the market. Is it because the companies are not able to make a portfolio that is generating alpha as well as following the ethical principle, or is the reason something else?
So that's an interesting question. There are more than 6,000 companies today listed in India. And out of the 6,000 companies, as per the screening that we receive, more than 3,000 companies are actually compliant. Of course, certain sectors are strictly prohibited. But as it turns out, our focus sectors, with, for example, manufacturing, are all part of the compliant list. Of course, certain stocks that might not be adhering in terms of debt to assets or debt to equity will not be compliant. But overall, you get the picture, right? 3,000, more than 3,000 stocks are across sectors compliant. So we really do not find any dearth of choice when picking these stocks for this portfolio. So to answer your question, no, we don't see a big challenge in picking stocks that we think will perform. We don't think adhering to these guidelines is creating any significant challenge in our stock picking universe as well.
So, can NRIs invest in this portfolio?
Yeah, so NRIs can invest in this portfolio. The portfolio is readily available to the worldwide market, and there are two routes to go about it. You can either go the NRO route or the NRE route. That's up to the investor's choice.
And are there any exit or entry loads associated with your fund?
No entry loads, neither any exit loads as well. We do have a performance fee, which is charged annually, provided we cross a certain hurdle.
Okay, so when I am investing in your fund, when I'm giving you the minimum ticket size, which is 50 lakhs, how do you ensure the safety of my funds? Is there a custodian which would facilitate these transactions, or how does it work?
So, like any other PMS fund in India, all our funds are also supported through custodian activities. So, in India, how the structure for a portfolio management service works is that the portfolio manager, the SEBI registered portfolio manager, in this case us, is not given the responsibility of controlling custody of funds. We are only giving the recommendation on what to do with that certain fund, where to invest it, how much of it to invest, when to exit, how much of it to exit. Right? So we are essentially managing the fund, but we are not in custody of your funds. Who is in custody of your funds? That is the SEBI registered custodian. In India, there are a total of 13 custodians. We are partnered with 3 of them: ICICI, Orbis, and Nuvama.
Thank you for joining us today, Karan. I hope we have answered all the questions of our investors.
Thank you.